All right, traders. So, in this video, I want to talk about the ABCD strategy. It's a classical strategy and it's been there for a very, very long time. It's used in India, outside India, and it works perfectly because it's just based on the price action, fundamentals, the principles, and it works perfectly because, we have to follow the basic rule that, we have to trade with the trend. It doesn't use any indicators as such. We'll just be using the price action movements and the volume to confirm our trades. So I'll be talking about what is the target, what is the stop loss in this video. So do watch till the end. And I'll try to show this strategy on today's market. I've chosen a couple of stocks that were in focus today, which were the fundamental catalysts, and we have traded on them. So we'll see this strategy particularly on the stocks of today's market, the 29th of May, so that you get a perfect idea of how this works. But before I get started, I just want to thank all of you people who are watching this video. We have got tons of watch time in the past couple of days, and that has been motivating us to make new videos every day to help people like you profits consistently from the stock markets. So do like this video, share this video, and subscribe to our channel. So and spread the word of the financial analyst so we can help as many people as possible and grow this stock market community. All right, so without further ado, let's get started. So, in the ABCD strategy, what are we looking for? So, let's say the market opens at this price. So, at 9:15, the markets are opening. This is the charts of Prestige Estates. We have to see this strategy only on the 5-minute charts. So, it's a strategy for the 5-minute time frame to give you a quick profit. So markets open around 9:15 at this price, and when the market opens, prices explode either up or down. And if you've been watching my videos, we don't trade in this price movement. A lot of people do, and they have a lot of strategies how to scalp the first 15 to 30 minutes of the market. But I really don't find it very logical, so I won't be trading this movement. So when the prices start to rise, that's the point A. We don't want to get into that price because we really don't know if this movement is sustainable or how much the price can rise. So that's a movement that I'm avoiding. So when the price rises and reaches the point B, that's an exhaustion point. That's a point where the prices cool off. The people who had bought the share at point A, they will start selling at point B. Do we want to act on this point? No, we don't want to act on this point because it's too late now. The prices have already gone up and a pullback is essentially starting. So we don't know how much the pullback will be. So if we enter at this point, it will be too late, it will be too early, and we'll probably hit our stop loss. And since we don't know what the pullback is, we cannot define a stop loss, we cannot define a target. So we have to wait for the pullback to start. And if you see from this point around 10:25, the pullback has started and the price actually cooled off at this point, which is actually a potential support for the stock. So this is whenever the price starts to cool off at a particular point after a big rise, after the pullback has been formed. So we know psychologically that the price is not able to go below this level and the support has been formed. So this is a price around this level we have to start to buy Prestige Estate. This is today's market, 29th. So we'll buy at this point, we'll keep a stop loss, a break below the current the support that has been formed. So you can keep a stop loss somewhere around here, and we can easily go long on this stock. So I want to, and this, as you can see, prices rise from here till the point D. A lot of people also refer to this pattern as a flag. It's up to you what you call it, but I like to call this the ABCD pattern. I want to analyze the volume before I discuss a couple of examples so that the strategy is clear to you. So when the market opens, prices rise. And this will be followed by an increase in volume. As you can see, volumes have been rising because there is a sudden spurt in the prices. That's not where you want to get in. At the point B, volume will start to cool off. There will be very low volume because only a couple of people who had bought earlier will be selling the stock, and still people are bullish, they are holding on to the stock. So this period of consolidation or pullback will be of low volume, and we don't want to get into that. We'll be wanting to get on the point C, where still the volume is less, but we have found a potential support, end of the pullback. Keeping a stop, a break below the potential support, we'll buy here. And you can see when the price rises above the point B, we will have an immediate spurt in the volume, increase in the volumes. And when we go above this price, This resistance has turned into a support and prices go up. We can see an increase in the volume, and this is the momentum that we are looking for. And in just a matter of minutes, we reach our target. Volume was good, so that really supported us to reach the target. So do keep this in mind. This is just following the basic principles of support resistance. We buy at the support, we wait for the resistance to be broken. When the resistance breaks, resistance forms a support, there will be a spurt in volume, volumes rise, and we reach a target D. How do you set the target D? One option is you can use pivot points or Fibonacci's. You can either use that, or the other way that you can do is, if you're not sure of the target, you can keep trailing the stop loss once you have breached the point B. So that's the strategy. Let's have a look at another example. Colgate Palmolive. What a movement we saw in Colgate, about 7 to 8% increase in prices today. A lot of people made money. Do check out our story to see the results our clients have made. So markets open at this price. So in this strategy, it's not necessary that you have to only buy in the market when the market opens. You can see it anytime during the day. So around 9:15 when the price is open, we have an increase in the volume. We can confirm there's been such a increase in volume. Prices have risen. This is not a movement that we are chasing. We're not scalping because there is no logic right now. At point B, we have found a potential resistance. Prices have halted. We can see a shooting star or a gravestone doji, and prices start to fall. We'll wait for the pullback to end, and we can see at this point, at point number C, a couple of dojis are being formed, and it looks like a potential support has been formed. So buy around as close as possible to the point B. Maybe some people buy a little bit above, but try to buy as close as possible to the point C, keeping a stop just a break below point C. And once this B point resistance has been surpassed, we can see an increase in the volumes and price in no time will rise. So you can see after this price has broken, increase in volume. When the pullback was happening, there is hardly any volume. So these principles will remain the same. A to B, high volume. B to C, no volume. Find a support to buy. And then C to D, increase in volume to move towards your price and breaking this resistance of B, turning into a support. That's a strategy. Also, if you look closely, you can see another pattern was being formed at this point. So you can consider this point as your A point, prices rise. This point can be considered as a B point. This point is a C point where a potential support has been formed, and you can buy at this point, get this profit, and this will be your D point. So it doesn't matter where you are in the day. It just depends when you are starting to trade. If you are in the early market, you can start with the 9:15 candles, or otherwise you can maybe go in between the market to get this pattern. And you can see this movement happened at 13:30, 1:30 p.m. As I said, when during the 11:30 to 1:30 there is no movement and we hardly trade. So this exact movement happened after 1:30. Let's have a look at another example. iBulls Housing Finance. Traders, one of the favorite stocks that traders love to play with. So this is the time of date of 27th, a couple of days back, 1 2 days back. So markets open at this price, spurt in volume, increase in volume. Prices go from A to B. We don't want to act in this time because we really don't know if the rallies are sustainable. After B, 2 point C, when the pullback is happening, we will see a fall in the volume, a consolidation zone. That means no one is selling. Only people who had bought earlier are selling, but new people are not shorting the stock. They are waiting for another rally because trend is your friend. And after the point C, we see an increase in the volume when the resistance of B is broken, and we can easily buy around the point C, keeping a stop just below your point C and going to the point D. And you can see that this pattern keeps on happening again and again as and when you keep on progressing. So this is just based on the concept of support and resistance. Let me know what you guys think of this pattern. I will recommend you to practice this pattern and backtest it in a couple of stocks or in the indices that you are trading in over the weekend. So try to perfect this pattern in the weekend so you can trade when the market opens on Monday. So, but do practice. That's one of the most important things. Let me know if you have any variations to this pattern, or if you want to add any indicators and get the better results, so everyone can help from this pattern. Do analyze the volume. That's the key part in this entire pattern. All right, so I'll see you next time, and I hope this video has helped you. Thank you.